Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh dan salam sejahtera. Terima kasih kerana menghadiri sidang akhbar pada pagi ini mengenai prestasi ekonomi negara pada suku kedua tahun 2025 dan juga perkembangan monetary dan kewangan oleh Bank Negara Malaysia dan juga Jabatan Perangkaan Malaysia. Bersama saya ialah Ketua Perangkawan Malaysia yang bagi Datuk Seri Dr. Muhammad Uzair Mahidin. Sebagaimana kita sedia maklum, Jabatan Perangkaan Malaysia merupakan agensi rasmi yang mengumpul dan juga menerbit statistik KDNK negara. As per our usual practice, please allow me to continue the presentation in English for the benefit of our international audience. Global growth was resilient in the second quarter of 2025, and this is supported by domestic demand as labour market conditions remain positive. Regional trade activity was broadly sustained as the US-China tariff truce led to some front-loading of both consumer and industrial goods. Inflation moderated in both advanced and emerging economies due to lower energy and the non-energy prices such as food, metals, and minerals. Before I share our assessment on economic outlook, let me now invite Datuk Seri Dr. Uzair to first announce Malaysia's GDP performance in the second quarter of this year. Over to you, Datuk Seri Uzair.
Terima kasih, Gamno. Pada suku kedua 2025, ekonomi Malaysia berkembang sebanyak 4.4%. Peningkatan ini didorong oleh perbelanjaan isi rumah yang lebih tinggi dengan pasaran pekerja yang positif, aktiviti pelaburan yang lebih kukuh serta pertumbuhan ekspor yang berterusan disokong oleh ekspor E&E dan keracakan aktiviti pelancongan. Bagi terma pelarasan musim suku tahun ke suku tahun, KDNKA negara kita menunjukkan peningkatan yang lebih kukuh sebanyak 2.1% berbanding 0.7% pada suku pertama 2025. In the second quarter of 2025, the Malaysian economy expanded further by 4.4%. This was supported by higher household spending amid positive labour market conditions, stronger investment activities, and continued export growth supported by E&E export and robust tourism activity. On a seasonally adjusted quarter-on-quarter basis, GDP showed stronger growth momentum of 2.1%, higher than the 0.7% recorded in the first quarter of 2025. Dari segi pengeluaran, sektor perkhidmatan meningkat 5.1%, sektor pembuatan 3.7%, sektor pertanian 2.1% dan sektor pembinaan 12.1%. Manakala sektor perhubungan dan pengkuaran menyusut sebanyak 5.2%. Sementara itu, dari sudut permintaan, perbelanjaan penggunaan isi rumah meningkat 5.3%, pelaburan sektor swasta dan awam masing-masing meningkat 11.8% dan 13.6%. Perbelanjaan penggunaan kerajaan bertumbuh sebanyak 6.4%, namun ekspor bersih menyusut sebanyak 72.6%. On the expenditure side, domestic demand was driven mainly by higher consumption and stronger investment activities. Private consumption growth was driven by higher discretionary spending, particularly in the restaurant and hotel segment, supported by positive labour market conditions and income-related policies. Meanwhile, investment growth was driven by continued structures investment and higher investment in machinery and equipment, mainly for data center and IT-related equipment, stronger capital expenditure by public corporation. The contraction in net export was due to a decline in mining-related export and high capital imports, offsetting continued E&E exports. On the supply side, all sectors continue to expand except for the mining sector. Sustained growth in the services sector was supported by consumer-related and government services. The manufacturing sector registered steady growth in domestic-oriented subsectors, but was weighed down by disruption in refined petroleum production. The construction sector continued to record robust growth driven by non-residential, residential, and special trade subsector. On the commodity sectors, the agriculture sector improved amid stronger growth in oil palm production following favorable weather conditions. However, the mining sector contracted further due to lower oil and natural gas output amid plant maintenance activities. Now we move on the current account. The current account of the balance of payment recorded a lower surplus of RM 0.3 billion or 0.1% of GDP in the second quarter of 2025. This was mainly due to lower goods account surplus reflecting weaker mining-related export from plant maintenance activities and higher capital import driven by electrical and electronic product and data center equipment. On the services account, the deficit continued to narrow, attributed to higher travel receipt. Additionally, the primary income registered a smaller deficit amid widening secondary income. FDI during this quarter recorded an inflow of RM 1.6 billion, mainly due to sustained inflow in the equity injection and higher debt instrument inflow. The equity and debt inflows were, however, partially offset by outflows in reinvestment of earning, given higher dividend payments and losses registered by some foreign companies in the manufacturing sector. These FDI were channeled mainly into the services sector, predominantly in financial activities and ICT subsectors. The FDI were primarily from Singapore, Japan, and United Kingdom. Thank you. Let me hand over the presentation back to Governor.
Thank you, Dato' Sri Uze. Before I move on to the economic outlook, allow me to just reinforce what Dato' Sri Uze's point that the smaller current account surplus in the second quarter this year was largely attributable to cyclical factors. This include disruptions in the commodity production due to planned maintenance activities, resulting in a 5.1 billion quarter-on-quarter decline of mining-related exports and a surge in capital imports in line with the realization of data center-related investments. It is worth reiterating that the increase in capital imports will strengthen our exports in the long term, as the operationalization of data center investments is expected to contribute to services exports. In fact, we have seen some of this coming already. In addition, the higher travel receipts, 95.3 billion last year, and this year was, as compared to 2023, at 68 billion ringgit, is driven by the continued rise in the inbound tourism, and these are expected to contribute to the further narrowing of the services account deficit. And this encouraging development is expected to continue into 2026 following the government initiatives such as enhancing the flight connectivity and also the Visit Malaysia 2026 campaign. And overall, the current account balance in the first half of this year remains healthy at 1.7% of GDP. If you look at the first half of last year, it was at 0.9%. And for the whole of this year, it is still expected to remain in surplus within the range that we forecasted earlier on, that is between 1.5% to 2.5% of GDP. And this will be supported by the sustained global demand for E&E and also the continued growth of inbound tourism and travel. Let me now continue with the outlook of the economy. Global growth is expected to moderate in 2025. The conclusion of trade negotiations at the end of July would help reduce the degree of uncertainties on US tariffs. However, there remains uncertainty on some form of tariff, especially the product-specific ones. Tariffs are expected to weigh on global trade and growth in the second half of the year, as the current pause in tariff hikes lapses and the front-loading effect dissipates. Nevertheless, fundamental support to global growth remains, especially from the positive labor market conditions, the monetary policy easing, and also the fiscal support in major economies. Let me move on to the Malaysian economy. The Malaysian economy is projected to grow between 4 and 4.8% in 2025, compared to the 4.5 to 5.5% range that we forecasted in March this year. The revision is to take into account a more challenging external environment since March, and further details on the assumptions of the forecast revision can be found in the white box of our quarterly bulletin publication. While the recent tariff reduction for Malaysia provides some certainty, the high tariff environment remains a notable headwind for a small open economy like Malaysia. The tariff impact will partly be cushioned by continued demand for the E&E goods, the robust tourism activity, and resilient domestic demand. This will be explained further in the subsequent slides. Moving on to the trade performance, Malaysia's trade performance in the first half of this year was partly supported by a front-loading of exports, particularly to the US, as businesses sought to mitigate risk from the tariff increase. However, this has tapered off towards the end of the second quarter. Therefore, exports growth is expected to be moderate in the second half of this year, as tariffs take effect and challenging environment persists. Nonetheless, the continued demand for E&E goods, underpinned by resilient demand and emerging opportunities in the AI segment in particular, will continue to provide some support to exports in the second half of this year. Tourism activity will also provide further support to export growth. Improved flight connectivity, the extension of visa-free policies, and the promotional efforts leading up to the Visit Malaysia year next year, these are projected to boost both tourist arrivals and also tourist receipts. In the domestic economy, consumer spending continues to serve as the backbone of Malaysia's economic growth, driven mainly by the favorable labour market conditions. And looking ahead, household spending is expected to stay resilient, supported by steady employment and wage growth, particularly in domestic-oriented sectors, as well as income-related policy measures that are still in place. Moreover, the healthy household balance sheet and the increased distribution of targeted cash assistance, this will further support consumer spending. Let's look at investment. Growth will also be supported by the continued expansion in the investment activity. The recent trends continue to reflect strong investment growth across both structures and machinery and equipment. Forward-looking indicators from the latest investment approvals by MIDA point towards sustained investment momentum, underpinned by a healthy pipeline of planned investments despite the rising global uncertainties. And furthermore, the continued implementation of the multi-year public projects and high realization of approved private investments will also help cushion the impact from external shocks, making the investment landscape more resilient. Moving on to the balance of risks, the growth outlook is subject to both upside and downside risks. Downside risk includes a deeper slowdown in trade as a result of higher tariffs, weaker sentiment amid the higher uncertainties affecting spending and investment, as well as lower than expected commodity production. On the other hand, growth could be higher, with favorable outcome from remaining trade negotiations, the pro-growth policies that are pursued in major economies, as well as the more robust tourism activity. We will, nevertheless, continue to monitor these developments very closely. Let us now turn to inflation. Headline and core inflation remain moderate in the second quarter of 2025, averaging 1.3% and 1.8% respectively, and these are below their historical averages. The moderation in headline inflation from the previous quarter was mainly driven by the further declines in prices for non-core items, particularly fresh food and fuel. For example, prices for fresh vegetables and eggs remain on a downward trend, while the fuel prices, RON 97 and the diesel, are also declined. This movement reflects the ongoing pass-through of softer global commodity prices. More broadly, inflation has also been dampened by the waning effects of earlier adjustments in water tariffs and the SST on electricity usage. Core inflation remained broadly stable during the quarter, as movements across items largely offset one another. Lower inflation for food away from home, for instance, was balanced by a slower price decline in the mobile communication services. At the same time, inflation for high-weight items like rent has remained relatively steady, while food away from home has remained elevated above its long-term average. These items continue to contribute materially to core inflation due to their sizable share in the household spending. Looking ahead, the inflation outlook for 2025 remains moderate. We have revised our forecast range for headline inflation to 1.5% to 2.3% from the previously earlier projection of between 2% to 3.5%. And this adjustment reflects more moderate cost and demand pressures than previously anticipated, alongside the government's continued efforts to cushion the impact of domestic policy reforms on most households. The inflation outlook will depend on how global and domestic cost factors evolve. Upside risk could stem from a further escalation in trade uncertainties or geopolitical tensions, which could trap up global commodity prices and raise imported costs. There is also a risk of larger than expected spillovers from changes in domestic policy to the broader prices. On the downside risk, inflation could ease further if global growth weakens, leading to softer commodity prices, weaker export demand, and subsequently slower wage growth. In addition, a smaller cost pass-through from policy reforms would also help keep inflation contained. Let me now explain on our monetary policy. At the July MPC meeting, we assessed that while Malaysia's economy remained resilient, external uncertainties could affect domestic economic prospects. With inflation to stay moderate, the OPR was reduced to 2.75% as a preemptive measure to buffer our economy against these uncertainties, and importantly, to preserve Malaysia's steady growth path. Since then, we have seen some clarity in the external environment, particularly on the outcome of tariff negotiations recently, and including for Malaysia. In this regard, our recent OPR cut would provide an additional lift to domestic growth amidst the moderate inflation prospects, and we will continue to monitor the effect of the OPR reduction to the economy. While uncertainties surrounding sectoral tariffs continue to linger, what is important is that the Malaysian economy remains on a strong footing. Going forward, the MPC will continue to remain vigilant to ongoing developments and assess the balance of risks surrounding outlook for domestic growth and inflation. In the second quarter of this year, the ringgit appreciated by 1.5% on a nominal effective exchange rate basis against the currencies of Malaysia's major trading partners. The ringgit also strengthened by 5.1% against the US dollar. This movement was driven primarily by external factors, particularly a broad-based weakening of the US dollar, and this reflects investors' concerns on US economic prospects in light of the US trade and fiscal policy developments. The ongoing coordinated efforts with the GLICs and GLCs and engagements with corporates and investors to encourage more consistent repatriation and conversion of foreign earnings continue to provide two-way flows in the domestic forex market. Looking ahead, Malaysia's favorable economic prospects and domestic structural reforms will continue to provide the medium-term support to the ringgit. BNM will continue to ensure the orderly functioning of the domestic foreign exchange market. In the second quarter of this year, credit growth to the private non-financial sector was broadly sustained at 5.2%. First quarter was 5.4%. This is amid a steady growth in outstanding loans for both businesses and also households. Outstanding business loans expanded by 4.5%, following broadly stable growth in both working capital and investment-related loans. For households, outstanding loans grew by 6%, the same as the first quarter, with sustained growth in loans across most purposes. Following the OPR reduction in July, we have seen interest rates on households' existing floating rate loans adjust accordingly, and thus resulting in lower repayment amount for these borrowers. Looking at SME financing, SME's financing activities in the second quarter remain steady, with outstanding financing expanding at 6.9%. And in this quarter, we saw forthcoming financing applications and approvals for both capital and investment-related purposes amid the resilient business conditions. More positively, banks and DFIs continue to support the SME's business needs with a steady growth of financing disbursement, particularly in services, construction, and the manufacturing sectors. The banking system continued to play an important role in supporting economic growth during the quarter. The bank's strong financial positions, including capital and liquidity buffers, ensure that they remain well positioned to meet the domestic economy's financing needs. The quality of business and household loans remains sound, with low and stable impairment ratios, and the newly restructured and rescheduled loans are also limited. This has been supported by prudent loan affordability assessments and provisioning practices by banks, which help ensure banks maintain sufficient buffers to absorb losses. I've come to the summary of the presentation. In summary, the Malaysian economy expanded by 4.4% in the second quarter of this year, and this is driven by the robust expansion in domestic demand alongside continued export growth. Overall, growth in 2025 is expected to be between 4% and 4.8%, while headline inflation is expected to remain moderate. The external environment remains challenging. Tariff uncertainty continues to linger, and the impact will take time to fully materialize. Nonetheless, let me stress that Malaysia is facing these challenges from a position of strength. Our economy remains on solid footing, supported by resilient domestic demand, continued demand for the E&E goods, and the diversified export structure. The steady rollout of structural reform, such as the national master plans and fiscal reform measures, is certainly critical to boost our resilience against future shocks. With that, I've come to the end of the presentation. My team and I, as well as Sri Uze and his team, will be happy to take questions from you. Thank you very much.
Thank you, Governor. Now we move on to the Q&A session. I would like to call for questions from the media. So we will take your questions in three segments. The first on the economic topics, the second on the financial sector topic, and the last on other topics. If you have any questions, please feel free to raise your hand. Our colleagues stand ready to pass you a microphone. Please state your name and publication before sharing your question. Now, I would like to invite questions from the floor on the first segment, the economy. We will take a few questions in one go. Okay, the lady here, Anissa from Bloomberg.
Hi, good morning. Anissa from Bloomberg here. So you recently cut the OPR and you lowered the statutory reserve requirement, right? Do you see this as enough to support the economy, or is there a possibility of another rate cut this year?
Can I have another question? Okay, the lady here.
Hi, Governor. Razia from Bernama here. My question is, has Bank Negara factored in the potential impact of recently announced US semiconductor tariffs into latest GDP production, and how significant is the downside risk to Malaysia's E&E exports and overall growth? Thanks.
Okay, Sachi from GG, the guy.
Governor, thank you very much for your presentation. I have two questions. One is about the revision of the GDP forecast, and it was done before the final announcement of the tariff agreement, just a few days before. And we are still expecting a final agreement to be released from both governments. And do you see any further need to revise the GDP, if the final result comes out? And the second question is, do you see the risks, for the growth well balanced between upside and downside, or do you see it skewed to either one of the directions?
Okay, Governor, over to you for these three questions first.
Thank you for the questions. Let me take the first questions on the OPR card. As I mentioned earlier, Anissa, the OPR card was a precautionary move, and the intention was to preserve our steady growth path, given the global uncertainty and also given the moderate inflation outlook. So that was the reason for the cut in the OPR. Since then, some clarity in relation to tariff in Malaysia has come out based on the outcome of the trade negotiations. Our focus now is really in terms of assessing the transmission of the July OPR cut on the domestic economy. But let me emphasize that our economy remains on a strong footing. The OPR cut would certainly provide additional lift to the domestic growth. And with the OPR cut, our monetary policy is consistent with our outlook for growth and inflation. So that's on the monetary policy part. On the second question from Bernama and also from DigiPress, I think it's about the same question in terms of the impact from the tariff negotiations and the balance of growth. Basically, I would say that I think it's good that there's some certainty in terms of the negotiations. And of course, I think if you look in terms of tariff is not a good solution to solve trade imbalances issue. High tariff is not good for everyone, for the country that actually impose a tariff or even to the recipient country. The rule-based system is proven to be the best. And if you look at the agreement, the 19% tariff is, of course, lower than the 25% tariff that was announced, I think, in April, and also later on increased to 25%. And this conclusion of the tariff negotiations would definitely provide better certainty to businesses, investors, and also households for them to make better decisions. And in our projected revised growth of 4 to 4.8%, we have taken into consideration the range of possible outcome from the tariff. If you look at our assumptions in the quarterly bulletin, we have taken an assumptions range of between 13% to 25%. So that falls within our growth range at this point of time. So there's no need for us to revise the growth numbers further. In terms of the balance of risk to growth, again, the conclusion of the negotiations definitely reduces uncertainty. But again, there's still uncertainty that lingers around in terms of the sectoral tariff, for example, and also in terms of the tariff developments of discussions and negotiation with certain countries which have not concluded yet. So this could tilt growth either way. I mean, of course, it could go up. If the outcome of the US and China negotiation is positive, that could be positive for the country. And of course, I think the sectoral tariff as well. If it's lower, that'd be positive for the country. And again, if it's higher, that could also be a downside risk to the country. So I would say it could move in either direction. So our 4 to 4.8% growth accounts for the variety of scenarios in both directions, at upside or even downside. And something that we'll definitely monitor very closely, the developments. But having said that, I want to highlight that we are operating in a different environment now. In an environment where changes happens very quick and very uncertain. Sometimes we need to monitor daily changes in terms of the announcement that's made. So under this kind of environment, forecasting is challenging. But that's where we need to have an assumption that is broad enough for us to be able to capture the possible growth range for the country. So the 4 to 4.8% would broadly capture the possibilities in this. And it's something that this uncertainty is something that a new normal that we'll have to live in. Thank you.
Thank you, Governor. So may I invite another round of questions on economy? Okay, Afrina from TV3 here.
Hi Governor, Afrina from TV3. Nak tanya, mengapa Bank Negara menyimak turun unjuran inflasi pada 1.5 hingga 2.3%, sedangkan kerajaan dijangka untuk melaksanakan penyasaran subsidi diesel, subsidi RON 95 pada separuh kedua pada tahun ini. Terima kasih.
Okay, can I have another question here?
Hello, good morning. I'm Umaira from Bernama. So during the announcement of Malaysia first quarter GDP, you highlighted that the country benefited from front-loading of exports ahead of the US semiconductor tariff. And now that the tariffs are in place, so how do you see the situation playing out for this quarter and the next? Will export volumes and economic activity will be reduced compared to the front-loading period? Thank you.
Can I have another question? Okay, the gentleman over there.
Hello, sir. Hi, Adam from The Edge. A little bit about financing for households. It has been growing almost 6% since the pandemic, while credit card balance has also increased by an average of 9 to 10% since 2021. How do you see this trend, and what would be a good level for us to support the economic growth? Thanks.
Okay, we'll take these three questions first, Governor.
Thanks. I think the first question, Afrina, in terms of why do we reduce the inflation projection, partly due to a few reasons. We have seen that the global cost conditions has moderate. So that's number one. So that's affected in terms of the reason for the reduction in the inflation. Second is that we have seen the impact from the measures implemented by the government. The impact on the prices has also been muted, partly because of the design of the policy and also in terms of the sequencing of the policy implementation itself. And third is that we don't see strong demand pressure. There is demand there, but we don't see excessive demand pressure. So these are the three elements that led to the revision in the inflation range from 2 to 3.5% to 1.5 to 2.3%. And this range we have taken into consideration as well for potential reform measures, even including the RON 95 as well. So that has captured those points already. Second, in terms of front-loading activity, you're right. I think we have seen front-loading activity in the first and second quarter of the year. In fact, I think March, April, but we have seen this slowing down. In fact, in June, we've seen some moderation in the front-loading. And that's why our forecast is that for the second half of the year, export will be a bit more moderate. And that's because of the front-loading would dissipates, and also the impact of the tariff would now starts to come into picture. So we have accounted for that. The second half of the year, export will be more moderate as what we have seen in the past. So that's for it. But having said that, looking at the E&E sector, so given the developments in AI and the rest, so this will provide continued support for demand for the E&E sector. So this will definitely continue to support our exports going forward. And second is that we also have tourism. We've seen that tourism has been increasing. In fact, this quarter's tourism arrivals is more than the same quarter that we saw in 2019. So this is the first time that we have matched the pre-COVID period. If you look Q2 of this year and Q2 of 2019, it's more than what we saw during the pre-COVID. So there's improvements there. And with the Visit Malaysia year, again, that will also enhance further the contribution from the tariff, from the tourism. Thank you. Third, in household debt. Yes, household debt now is about 84.3% in terms of GDP. But if you look in terms of what level is suitable for the country, I would say that at this level, it is still elevated. and it's something that we need to manage, and we are monitoring this very closely. But from a stability angle, this contribute, we look in terms of the quality of the loans that's being granted. They are good quality loans. In fact, the DSR has also improved, and also in terms of the banks have using prudent loan approvals for these household loans as well. And third, if you look at the quality of these loans, they are also of good quality. If you look at the impairment ratio for household loans, it's very low. It's at 1.1%, latest number of impairment for household loans. Thank you.
Thank you, Governor. Are there any more questions on economy? Okay, if there's none, let's move to the second segment on financial sector topic. May I invite questions from the floor? Okay, is there any more question? Okay, the lady here in front.
Hi. So, Bank Negara is set to release on exposure draft on open finance and a discussion paper on asset tokenization by year end. So, does BNM see asset tokenization as a near-term opportunity for capital markets, or is this still exploratory at this stage? And what timeline does BNM envision from exposure draft to actual implementation of open finance policies? Thank you.
Are there any more questions on financial sector? Otherwise, Governor, you can take this first.
Thank you, Lisa. Thanks for the question. I think for open finance, we will be issuing the exposure draft this year, as you rightly pointed out, and we will finalize the policy document by next year. So that's a timeline in terms of for the open finance document. And subject to industry and also public readiness, the aim is for the first phase of the open finance to be rolled out by the industry in 2027. So that's a timeline we got to open finance. Coming to tokenization, we view tokenization as a promising enabler of innovation in the financial sector with potential applications beyond capital markets. And our focus is really on exploring the potential benefits and implications of tokenizing real world assets in financial services, particularly use cases with tangible benefits for the economy. And the discussion paper expected later this year, to be issued later this year, will outline our proposed co-creation approach, guidance on developing tokenization use cases, and safeguards to support responsible exploration and adoption. So that's what we are going to cover in the paper. So basically, what's important is that we want to make sure that tokenization does provide value to the economy, and the use cases, it provides the use cases that could support the economy, for example, in terms of trade, invoicing, and the rest. And third is that it provides protection to the users and the consumer as well. So these are the important elements that we need to look into and as we develop the asset tokenization.
Okay, okay, the gentleman on the right side.
Hello, hi. I'm not sure. Okay, sorry. Do you see the ringgit to remain stable at this range, or do we still have to watch out for swings as seen in the last few years? Thanks.
Are there any more questions? Okay, Governor, over to you. Ringgit.
Thank you, Lisa. I think, as I said earlier, ringgit appreciated by 5.1% for the second quarter against the US dollar. And the latest, you look at as of 13 August, appreciated by 5.9% against the US dollar. And when we look at the NER, basically comparing the countries that we trade with, it increased by 1.5% for the second quarter. And year to date, 2.1% as of August 13. I would say that the favorable prospects and reforms that's complemented by the ongoing measures that we are taking to encourage flows, this will continue to support ringgit going forward. But having said that, ringgit is market determined. So we did not set a target for ringgit. We did not set a level where we are comfortable or what. So it's market determined. So our role is mainly to ensure that there's orderly market. There's no excessive volatility in the financial market, in the forex market. So that is our role. So at this point of time, at hovering for 20, for 21, so that's what it is. That's what the market determination of the ringgit value at this point of time. And of course, I think subject to the uncertainty in global environments, you will see movements in ringgits. In fact, I think if you look at the earlier part of this year, the volatility has increased given the uncertainty in terms of tariffs. But during the recent period, it has reduced the volatility given some certainty that's coming from the conclusion of the trade negotiations and also in terms of the developments that we have seen in terms of growth in the advanced economy and also in terms of the nation economy, and thirdly also in terms of the policy, monetary easing policy from the advanced economy that we are seeing right now as well. And these are all continue to support ringgit moving forward.
Okay, Amanda from TV3, and yeah.
Okay, Amanda. Yeah, I would just like to ask on how do you see the second half, right? Especially the current account. Will you see it still being on the surplus side because it's quite a sharp drop? Thank you.
Are there any more questions? Okay, this will be the last question, I suppose. Over to you, Governor.
As I highlighted just now, we look in terms of for the quarter one, it is low, it's 0.1% of GDP. But if you look at the first half, it's 1.7%. And the reason for the current account narrowing is partly because you have to understand that we are now in an investment boom. Our imports of machineries is strong. And this is positive, for example, like data center. And this will definitely raise our productive and export capacity in the future. In fact, we have seen some data centers are already ramping up their production, and we are seeing them already exporting their services or reduce our imports of services. So this is positive for the country as we move forward into the second half and also in the future. And the reason for the narrowing current account for the quarter two is also due mainly to planned maintenance in our oil and gas facilities. So that's why I said it is temporary, the narrowing of the current account balance. Exports for oil and gas commodities were about 16 billion ringgit in quarter two. And this export usually in the past averaged about 22 billion. So that's why that explains the recent narrowing of the current account balance. Exports in LNG alone was lower by about 5 billion in this quarter. So these are the things that's contributing to the lower, narrow current account balance. The good news is that I think we have started to see signs of recovery, especially in the LNG, where exports have increased from May to June by 43%. So the planned closing of the oil and gas sector, LNG, has now been better. So this has provided more production. And this will definitely provide some support for the current account balance for the second half and also in the future. I think most of the major plant maintenance has been completed. And this development should definitely support the current account developments for second half of this year and also for the future. And as I said just now, it will be between the range that we forecasted between 1.5 to 2.5% for this year itself.
Okay, we are now moving to the last segment, which is other topics. So I see a hand on the right hall.
Hi, sir. One question on medical inflation. So considering the assumptions of double-digit medical inflation to persist this year and the Joint Committee on Private Healthcare Costs was only formalized recently, do you see a need to introduce more interim measures on top of what has been announced in December on health insurance or any other segment for that matter along the value chain to ensure price stability? Thank you.
Any other question? Okay, over to you, Governor.
Thank you, Lisa. Thank you for the question. At the moment, the interim measures is still working. In fact, we are monitoring closely the implementation of the interim measures, and it's working well. So all these measures were undertaken under the reset. I think that's very important. The 5 key trusts and the 11 recommendations that being undertaken by the government over the next 2 to 3 years, that's very important. This will definitely provide a better outcome in terms of the medical services, in terms of reducing medical inflation, and secondly, in terms of providing, reducing in terms of the impact on increase on the medical health insurance takaful premium. For example, we are revamping the MHRT product and we're introducing a base product, and then we're enhancing transparency as well. And then third, we are also strengthening the digital health system. We're expanding the cost-effective healthcare services options where we are leveraging on the primary care so that you can reduce the cost of medical inflation because you can now leverage more on the primary care providers. And finally, we're transforming the provider payment mechanism as well with the DRG that's in place. So all these 5 key trusts will work in terms of providing, managing the high medical health and insurance inflation, and this will bring down in terms of the cost of the premium as well. And for the base product, we are coming up with a design by the end of this year, and we plan to launch it in phases by next year.
Okay. Is there any more questions? This will be the last segment, last round. Okay, with that, thank you very much for all the questions. We have come to the end of our press conference today. Governor, may I invite you to give your closing remarks?
Thank you, Lisa. No, thank you, together with Dato' Uze. Let me, both of us, thank you for attending the press conference today. Before we end, I would like to draw your attention on to a new financial management services by AKPK. That is to assist policyholders affected by premium revisions on the MHRT product repricing. They have released a press statement just this morning, and I highly encourage the media to give it a look. Second, I also want to share that Bank Negara Malaysia, the MIFC Leadership Council, and other strategic partners have launched the MIFC Global Impact Challenge 2025. This is an initiative to further strengthen the social and climate resilience through Islamic finance. And submissions for this are still open, and we encourage media partners to promote this initiative, to invite for people to participate in this. And last but not least, let's also wish you everyone selamat menyambut Hari Kebangsaan kepada semua orang, dan terima kasih for your presence here today and for all your questions today. Thank you very much.